Good morning, traders. So how do we trade the Aussie today? So still using the Bill Williams trading theory, and I'm going to start off with the monthly because this is pretty much a, a key level, or we're a couple of key levels here to watch. So if you look to the left on the monthly, you see all this congestion here. Okay, now I think what you want to really look at here, a couple of ways of looking at this. So this is a trend line, but there is another trend line here, which is this one here. Okay, so you can see this was a double top here, and then we gradually moved down. We broke through, came back, tested break, and then broke through. Okay, but we didn't come back to test this break. So this month it broke through. We're now testing that break. Okay, now there is another level here, which is that one there. Okay, so this high and this high, you can see we have, let me just zoom in a little bit to make sure that we have the right level here. Yeah, we do. So that one hasn't been tested yet. Okay, but for me, that was the break. So if you watch this from, just apply a bit of logic to this. So this was the previous breakout here, there. And we came back and we kept testing, kept bouncing it off a fairly significant level that, and then we finally broke through. And we've had sort of an attempt at it, not a monthly attempt to test it. The other one is this downward diagonal here. And we've tested it once. We're busy testing it a second time. Okay, now if I just zoom back out again, just to give you a broader picture, I want to draw another trend line here. Which is this one here. So this was a consolidation over 2.5 years, basically. It was a massive consolidation, then a breakout, and then a fall. Okay, so this could very well just be testing this triangle breakout, ready for this next leg here. Now, I'm looking at the monthly, so of course this could take a long time. So there's still, we could be lining up for another 3 years of, or 3 or 4 years of strength. And that's just one way of looking at it. But this was definitely a consolidation here over 3 years. And we didn't run away. We came back to it to come and test it. Okay, so with that in mind, let's just delete the noise. And we look at what happened on Friday. And now, Friday I'm going to take with a bit of pinch of salt because it was pretty much driven by the manipulation of 10 cent rather than what's actually going on in the world market. And remember, the Aussie is something which is driven by the US markets. Right, so there's my daily trend lines. What do you see? Okay, I see a wedge. Right, it's a falling wedge. I also see not diversions at this stage. And there's no real diversions except for at the end here. So there's a low, there's a lower low. But I'd prefer to see it on the fractional levels. But if we drill down on the different time frames, you'll see a double bottom here, but still no real diversion. Well, almost a quad bottom that's brewing here within a wedge, which could be very interesting. But I just want to drill back out to the weekly. Actually, it's the monthly we want to look at. So if we look at this current low, look where the oscillator is, and we look at the previous low, which is this swing low here, look where this oscillator is. So you can see we're brewing, diversions brewing at the moment on the monthly, and that divergence is monthly divergence. Okay, and that monthly divergence is continuation, which is continuation of the trend. Okay, so long term, I'm kind of the opinion right now that this triangle break is being retested, and now the trick is to see what happens next. So let's just drill down to the hour and have a look at what we have here. So we've got a big wedge. Let's move that a little bit in. We've got a fairly big wedge here, and then we have another consolidation pattern which is happening inside this wedge. Okay, so I can draw it like that, or I can draw it like that, or I can draw it like that. Okay, it doesn't really matter which way you look at it. Point is, we have a consolidation pattern. And I would probably line it up with there. There's a lot of touches there. Okay, so that is another falling wedge within a bigger falling wedge. We also have diversions on the awesome oscillator here. There's a low, higher low, and we've closed off with a green bar here. Okay, so I'm of the opinion right now that we are looking for a potential bounce, maybe just to come and test let me just, I want to streamline this a little bit better. Okay, so maybe just to come and test this channel top. Okay, or alternatively, we are looking at consolidating here for a turning point. So we're in an area that I'm very reluctant to go short. So there's just too much happening on the bigger time frames for me to be looking for shorts right now. So I'm probably going to sit on my hands until I see some real action happening. So what I'm looking for basically is sort of some fractional breaks on the 1 hour, and then a pullback to retest a break, as well as a turn of the oscillators here. Now, the other thing that you could argue is that this pin bar here is, well, it's not quite a wise man number one. So the deviation from the teeth is not really that big. This is more. There's a bigger deviation here from where we crossed over. So could argue it's wise man number one on the 30. I'm not entirely convinced of that. So I think what we're definitely going to get a gap up. Okay, so 10 cent is up 2.3%, and Rand dollar is sitting at 13.83. So I do expect us to get a sort of a gap up, but there's so much noise happening in Europe at the moment with Brexit and then the chaos that's happening in France, that I suspect Europe's not really going to rally. I suspect Europe is either going to be stale and head sideways, or they're going to have another push down. Okay, now it's Cyber Monday today. Black Friday sales results will start coming out as well shortly, and I can promise you, as soon as those results are positive, you'll see the Dow starting to rally, which will drive our market. Okay, so what to do? I'm going to delete all these things. So we're fully aware that there are reversal patterns starting to brew. So for me, I think what we need to do here is I just want to get a Fibonacci level here. So this was the closing range, and you can see we broke out of the range, and we pretty much more than likely hit the 100%. I don't have the 100% drawn in, but you can see we hit the 61.8, sort of a negative 61.8, and more than likely hit the 200% as well. Okay, so the quick way of doing that would be just to draw that in there and do that. And you can see this bar here was where the profit taking happened on the closing range breakout. So that is kind of the view that I would have today. It is a very small closing range breakout at the moment, so I would expect a gap up, more than likely hit one of these targets, either the range height, okay, and I'll just draw a line in here to get the range height. There's the range height there. I'll put a level in for that, which ties up quite nicely with some inside tails over here. And that is kind of what I would expect. So I would expect a rally up to 44,994, at which point I would expect a pullback. And that pullback could be telling because it could be lining up with a crossover here on the 30 of the alligator, and at the same time giving us a retest of the break. Okay, so that's kind of the view that I have of this morning. Definitely looking at a gap up, but there's nothing really concrete. Now, there's one pattern, two patterns, but it's not really a concrete pattern on the higher time frames. And the other thing that I see here is we do have some diversions brewing as well, which is continuation diversions to the downside. Okay, so as I said, very reluctant to be short here, but also just going to hold on to my cash for a little bit longer until I see some confirmation that the long trade is there. Okay. Remember, there is the Christmas rally. I know there's a lot of people that are saying that the Christmas rally is probably not going to happen. It's looking sad. But that's just really emotion talking right now. As soon as the retailers start announcing sales that start improving sales, etc., you're going to see a different tune. Okay, so for now, my advice for today is really watch this closing range strategy. If you don't know what the closing range is, search my channel. You will find the closing range breakout strategy. And that is the one that you need to play today. So whatever happens on a break above, just put the level in here. So to break above 44,747, then you're basically looking for a target of 44,994. Okay, don't try and hold on beyond that. Look at all these swing lows here. Okay, so I would expect us to test it, bounce off. Take your profit there. Your stop loss is going to be below this level here, which is 44.5. Let's call it 44.510. That would be your stop loss level. Okay, and alternatively, a break below that, then you can expect some lows to be challenged here, and possibly even further lows. Okay, I do believe that if we gap up and we sort of hit this level, I would be really interested in taking a short here. Okay, the trend is down. I'm still trading with the trend. So that is the most logical one until the trend changes. Okay, so gap up to there. I would look to see what happens around here. Look for a short, and you've got a few places where you stop above this fractional and above this fractional, and then see if we're going to head back to test these lows, or if we're going to break below these lows. Okay, so that's kind of my view for today. And the last thing I just want to do is just point out that we have a measured move that has not played out yet. Okay, so we still have this measured move that hasn't played out yet. Obviously, what we need to see happen is a break below this previous swing low. So the previous swing low, 44,104, and then we have a measured move of 42,800. Okay, so that is, to me, still very likely. But as I said, I'm reluctant to be looking at shorts around here. I'd rather wait for it to rally, then put my short in. So I've got a closer stop, and I'm trading with the trend. So the trend is currently down, okay, and I still have a measured move to play out. Okay, so that's kind of what I'm looking for. This may never happen. From where we are now, that is another 1,800 points. So it's possible to happen, but it also may never happen. But, that is the trade that is on the table, and that is what people are playing at the moment. Now, just bear in mind, we do have deviations from the alligator at the moment as well. So price is moving further away from the alligator, which is always a signal that a turn is about to happen. Okay, so that's kind of my view of today. So I would definitely do expect us to gap up and rally a bit. But for me, it's just going to be a long scalp until we get to 44,990. It might round itself off to those inside tails up there, which is probably 4,500. Yeah, so it may round itself up to 4,500. But if you look at this, if you're watching the lower time frames, you can get away with a 100-point stop loss here because this fractal level will be the one that you're watching. Okay, and you'll see that that lines up with this swing low here as well. So that is kind of my view for today. I'm expecting a bounce up, and then the other thing that we do have is we've got this break here, but I'm looking at the bigger wedge, so I expect us to bounce up and then move back the downside to come and tag one of these levels, either that one or alternatively the measured move play out. Okay, here we go. That's my view for now. I hope it helps, and I'll catch you later. Cheers for now.